Today we are going to talk about the expenses that we usually have when we run a short-term rentals, and more specifically about the three expenses that most of the people forget to deduct from their tax. How cool is that? Let's dive in! I am Benedicte. I am a real estate advisor and investor, and I am specialized in short-term rental to create passive income and build long-term wealth. So today, expenses. Your short-term rental is a business and it is also the asset of your property. So as an asset of the property, you have a lot of expenses that are exactly the same as your primary home. I'm talking about property tax, I'm talking about utilities, I'm talking about insurance. You know, the same kind of things will happen to your short-term rental because this is a property. Now, there are another kind of expenses that will be linked to your business side because you have a property. It's an asset. It's just like your primary home. You will have the same kind of expenses, but you will have other expenses because it's a business. And because it's a business, both expenses will be deductible from your income and from your tax. So that's the cool part of it, and that's the reason why with short-term rental, you have the possibility to get your short-term rental actually financing your lifestyle. Let me explain. So first expenses that you will consider as a business expenses that is deductible in your short-term rental business when you prepare your tax and your P&L, profit and loss. There is one type of expenses that you can add it because it's deductible, so don't forget them. It's the education, coaching, training, whatever you are going to do to make sure that you know everything you need to know to make it happen and to have your business running. So it's a business expensive. As long as you have a training, you can deduct that expense from your income. The second type of expenses that most of the people forget about it is that when you go to visit your property, or even before you buy the property, because you are going to visit some other properties and to decide whether you want or not to invest in that property to create a short-term rental, all those travel costs are deductible. So it means that from your gross income in short-term rental, you can deduct all of that. There are some tiny rules about it. Your accountant can tell you if you want to come to Tahoe. Yes, this is a beautiful place, and here you can enjoy my personal short-term rental, Tahoe Pine Creek. So you live at the other side of the country, you will fly, it will take you a day. Then you will visit properties, potentially with me if you want. So I can show you short-term rental. You can decide if you want to invest or not on those. And then, we are in the Lake Tahoe, so during the winter, you're certainly going to do a day of ski. And during the summer, you may rent a boat and enjoy the lake a bit because you came to here, so this is what you want to do. And then you are going to fly. Okay, so let's say that you fly one day, we visit property for maybe 2 days. You enjoy the lake for 2 other days. So we are 5 days, and then you fly back the 6 days. So your travel is 6 days. 6 days all in total. Both traveling days are considered as working days. And the 2 days we have visited properties together, so you can decide which one you want to invest in, is work days. So you have 4 work days and you have enjoyed the lake 2 days. Because you have more than 50% of your time working, then you can deduct 100% of your travel cost. And if you have stayed in the hotel, but we have visited properties on Friday and we have visited properties on Monday, then the hotel cost in between is also deductible. So when you want to invest in short-term rentals and when you are visiting your place and when you are trying to find new properties to invest on, all those costs are actually deductible. This is an interesting part of it. You do a short-term rental, it's a business. There are things that you can deduct, there are things that you are going to do that you usually don't do when you do a long-term rental because you don't have all those tax advantages. We have another one which is repairs and maintenance. So repairs and maintenance, you have that in your primary home. Yes, of course, everybody has that. But because it's a short-term rental, it will be much more used than what you are doing. So it will be more used and less used. Let me explain. It will be more used because you will have a lot of traffic, and it will be less used in a way that people are visiting the area. So they are spending less time in your place than if they were living here. So there is a good chance that they may not use the kitchen. They didn't even take the coffee. They prefer to go to the Starbucks because it's just walking distance. Or they don't want to cook, and the only thing that they have used is glasses and the microwave, and that's it. So you will see that there are stuff that are not going to be needing some maintenance and some repairs the same way. However, as soon as something is getting wrong, you will need to change it. So it means that you may ask for an handyman because you are not on site to come and change the lock of the bathroom, or to come and check the heater because it doesn't work, or to come and check the toilet flush. You will need to have all of that, and those might be costs that you don't have in your primary home because, you do it yourself, these kind of things. As it is remotely, you will need somebody to do it, so it will be another expenses. I recommend to consider 5% of your gross income in repairs and maintenance. This is a good rule of thumb about what is going to cost you, because your income will show how many people, how often people are changing, and so it will give you a good rule of thumb. Comment below and share with us what you have learned in this video and what are the other expenses that you can think of when we are talking about short-term rental properties.